Looking for reliable income from your investments? Investors looking for high-quality dividend stocks can consider the Dividend Kings, a collection of 48 businesses that have raised their payouts for at least 50 years. Because these stocks weather recessions well, retirees find them especially appealing. One answer could lie in the realm of Dividend Kings. These are companies with a long-standing history of consistent dividend increases, providing a steady income stream to their investors. Today we delve into the performance of three Dividend Kings: Altria Group Inc., Hormel Foods Corp., and National Fuel Gas Company. First up is Altria Group Inc., a company that has made its mark in the smokeless products industry. Despite the challenges of a constantly changing market, Altria has set its sights on earnings per share growth, a strategy that has proven successful. This focus has allowed the company to maintain a strong dividend performance, making it a reliable choice for investors seeking consistent income. In 2023, Altria concentrated on growing its line of smokeless products by incorporating Enjoy and introducing On Plus globally. Through a joint venture with JT, the company launched heated tobacco products. In response to the explosive rise of illegally flavored disposable e-vapor products, Altria pushed for a regulated e-vapor market. Altria aims to increase Enjoy's distribution network and fortify its supply chain. Altria projects adjusted diluted EPS growth between 1% and 4%, or $5 to $5.15 in 2024. The corporation pays dividends from about 80% of its yearly adjusted earnings per share. With 54 straight years of dividend increases, Altria currently yields 8.5%. Next, we have Hormel Foods Corp., a titan in the food industry. Hormel has distinguished itself with its steady dividend increases, a testament to its robust financial health and strategy. It is a company that has weathered economic storms while continuing to reward its shareholders, has expanded to become a global leader in the food goods industry with $19 billion in annual sales. Well-known brands, including Applegate, Spam, and Skippy, are among Hormel's products sold in 80 nations. Premium bacon, prepared proteins, poultry, and snacks categories drove Hormel's $3 billion in revenue and adjusted earnings per share of 41 cents in the first quarter of 2024. Acquisitions and natural expansion fuel Hormel's business and allow steady dividend increases. Hormel's competitive advantages include its market-leading goods and vast worldwide distribution network. Currently yielding 3.1%, Hormel has increased dividends for 58 consecutive years. The company projects 5% yearly forward earnings growth driven by cost cuts and revenue growth. Lastly, we have National Fuel Gas Company, a diversified energy firm. This company has shown that it can deliver consistent dividend growth, a sign of its resilience and commitment to its investors. Despite the volatility of energy markets, National Fuel Gas Company has proven its mettle by delivering reliable returns. Parading in 5 segments: exploration and production, pipeline and storage, gathering, utility, and energy marketing, National Fuel Gas Company, NYSE NFG, is a diversified energy firm. Exploration and production make up the largest segment. Effective hedging and robust volume growth helped National Fuel Gas post a 10% increase in output in the second quarter of fiscal 2024. Analysts had not expected earnings per share to rise by 16%. The company has routinely exceeded analyst expectations in 17 of the last 20 quarters. National Fuel Gas aims to grow by increasing its natural gas output and the length of its pipeline system. Over the previous 10 years, the company has expanded its earnings per share at an average annual rate of 4.4%. In 2022 and 2023, it increased its proved reserves by 8% and 9%, respectively. The business maintains a careful dividend payment ratio of about 50% and solid interest coverage on its balance sheet. With 53 years of consecutive dividend increases, National Fuel Gas qualifies as a Dividend King and currently yields 3.5%. While they operate in different sectors, these three Dividend Kings share common traits. They all have a long history of dividend increases, demonstrating their resilience during economic downturns. They have proven to be attractive long-term investments, offering reliable income and high yields. But remember, high yield does not necessarily mean high risk. These companies have shown that it is possible to offer attractive payouts without compromising on reliability. This is where the concept of diversification comes into play. By spreading investments across these Dividend Kings, you can balance the trade-off between yield and reliability. The key points to remember about these dividend kings are their consistent dividend growth, resilience during economic downturns, and their potential as long-term investments. They have proven that they can deliver reliable income, making them an attractive option for investors. So if you're on the hunt for reliable income from your investments, consider the dividend kings. They've proven their ability to stand the test of time, offering investors a steady income stream regardless of the economic climate. These companies are not just kings by name but by nature, reigning supreme in the realm of dividends. Remember to like the video, hit that subscribe button if you want to retire early, and check out the recommended videos for more investment help.